Hello, my name is Steve Bigelow with the Candlestick Forum. The market is starting to get a little bit toppy, but what we want to do is find the best candlestick chart patterns that are setting up in these market conditions. So right now, as you can see with the stochastics in the overbought area, right here at the 200-day moving average, a couple months ago, we saw a bearish doji, harami, doji, and then they started selling off. And again, when they came down through the T line, told us the probabilities were pretty strong. We were in a downtrend. Well, we've stayed up above the T line, but we did a bearish doji harami again in the overbought condition. That's starting to change our probabilities. Remember the doji rule. The prices will usually move in the direction of how they open after a doji. If we start seeing weakness here, that's a pretty good indication that that was the last gas buying going into the 200-day moving average area. We had suspected that could come up to this area, which was multiple tops over the last few months. But we have to watch to see what the doji day tells us today. Same scenario here on the NASDAQ. We did a bearish flutter kicker signal. Remember, that's one of your strongest reversal signals. It didn't confirm on Friday, but now we're doing a bearish harami. So if you add this all together, when you're up here in the overbought area, a strong sell signal, a bearish harami telling us the buying has stopped, another indication that if this opens lower tomorrow, or the market's open lower tomorrow, coming back below the T line, tells us they're starting to roll this market over. They failed at this level. We're watching the S&P, the same scenario, bearish harami, doji, right at a level that looks like it could be a resistance level in the overbought area. This allows the candlestick investor to be much more mentally prepared to start taking profits if things start selling off and individual stocks start selling off. On the other hand, if it opens positive, the doji rule is still in effect. This uptrend is still in progress. Which way is it going to go from there? Have no idea, but tomorrow's open will tell us which way. Now, we're going to be doing sessions in the next few weeks on the strongest candlestick signals and patterns. We've recommended QDOW when it came out of this J-hook pattern. A J-hook pattern is nothing more than a strong price move, an indecisive pullback, and then the next move is usually the same magnitude as this move. And we can visually recognize it because look where your selling started, right here at the 50. But this is where the T line becomes a very effective trend indicator. Notice what they did. They pulled right back to the T line. Now remember, the reason we have the T line on our chart is because it acts like a natural support and resistance level of human nature. The candlestick signals tell us what the investor sentiment is. And then if they start bottoming or bouncing right off the T line, that gives us a very strong indication of what's happening to investor sentiment. Why is this relevant? Because nobody has the T line on their charts. So you get the pattern setup being confirmed by a T line support, and you can see the J-hook pattern setting up. We know to be buying right here because the magnitude of this move will usually be the same magnitude as this move right here. When you see it happening at an area that everybody else is watching, it gives you an extremely high probability trade setup. Why? Because everybody's watching to see what's happening at a resistance level. And then we're watching to see what happens at the support level, the T line. So if we're taking profits right here, we can be buying right back here knowing we're getting ready for the next price move to the upside. The Bobble breakout is a more compelling J-hook pattern. Exactly for that same reason that everybody is watching to see what's happening at a resistance level. If we're taking profits and see it curling back up, now we have a very strong indication wave 3 is about to start. That's why in our members area, you'll probably see Fisker as a recommendation, because there's your Bobble breakout. If this opens positive tomorrow, extremely strong probability wave 3 will be the same magnitude as wave 1. Basically, recognizing these patterns at levels everybody else is watching and using the support levels that nobody has on their charts, but we can use effectively, just puts you in much better situations of being in the correct trade at the correct time. The kicker signal is one that we're going to be doing next or this Thursday. Kicker signal opens here, closes here. They gap it up at or above the previous day's open and go the opposite direction. As we can see in Moderna, the other day they recommended this stock, did a kicker signal, closed above the T line, and has confirmed ever since then. There's 3 different kicker type signals. There's a bearish flutter kicker signal, a bullish candle, then a doji, and then remember the doji rule. It's going to move in the direction how they open after a doji. When it opens lower and heads in this direction, a very strong indication the bears are in control. Call it a bullish flutter or a bearish flutter kicker signal, because if you took out that little doji, the flutter, you have a kicker signal, which is your strongest individual candlestick signal. That's why we recommended shorting tech today. Notice they gapped this down, did a long-legged doji, opened lower on Friday. We started shorting when it started trading back below the previous day's close. You also have the trend kicker signal. You're already in a trend. Notice you have a little bearish day. The next day they gap it up, and look where they gapped it up, right here at the breakout level. Using that trend kicker signal indication that this resistance level is not acting as resistance anymore gives you an extremely strong probability you're going to be in a strong uptrend. So you might want to join us in our Thursday night session. They're free. We're going to be going through the 3 major kicker signal formations. So you might come and join us. We also have what we call observe the obvious. When you start seeing candlestick buy signals right smack dab on a level that everybody else is watching, like a 50-day moving average, and a McMuffin pattern, a morning star signal followed by a doji sandwich, that implies it has a double implication that you're going to have more upside. And where is it occurring? When it breaks through this level. Now, our rhetorical question is, when we're buying right here, do we always expect these type of moves? The answer is definitely not. But the probabilities of being in a situation like this is dramatically in your favor. That's the whole point of candlestick analysis, is to be analyzing when there's a major change of investor sentiment at levels that can be easily identified, putting yourself in situations where the big trades can come into your account. A McMuffin is nothing more than a morning star signal, one of your 12 major signals, followed by a doji sandwich, or your morning sandwich, called a McMuffin, and the probabilities are double good because this is one of your 12 major signals telling you have more upside. The doji sandwich tells you have more upside. So you add those 2 together, you've got a very strong bullish trading pattern. So join us. We show people how to identify these pattern breakouts. You're going to see this one on our recommended list also, that if this opens positive tomorrow, it's confirming our Bobble breakout. This trend right here should be the same magnitude as this trend right here. This is not rocket science. This is what human nature does time after time. You don't have to be a sophisticated technical analyst. If you join our website and in the chat rooms every day, you're going to see the logic of why these patterns work consistently over and over. That'll be it. We'll see you in the chat rooms.